Welcome, ladies and gentlemen, to Commodity TV in the new edition of our online interview series. We want to talk today to Sibanye-Stillwater, the world's largest palladium platinum producer and number 3 in gold. And with us here is James Wellsted, who was just promoted to Executive Vice President, Investor Relations and Corporate Affairs. Welcome and good morning to South Africa. How are you, James?
Hi, Jochen, and hello to your audience.
Yeah, thanks for taking the time. I know you are super busy these days. There is the strike going on, but also you are very, very successful in what you are doing. And first of all, I have to disclaim here that I am a shareholder of the company, and thank you very much for a beautiful dividend, which just came into my account. And a lot of other shareholders really loved it, which I heard from a lot of phone calls and emails. So you guys are doing extremely well. Can you please comment, on the numbers you just presented, please?
Yeah, so we presented year-end results and significant, very record results from a revenue and EBITDA perspective. About $4.6 billion of EBITDA, which is substantially higher. A couple of years ago we were generating $1 billion. So it's a signal of the growth and the diversification of the company into other metals and obviously geographically as well, and benefiting, well positioned for this increase in commodity prices that we saw last year and obviously has continued into this year with the Russian and Ukraine conflict. So in a very good position, we are in a net cash position, 0.2 times net cash to adjusted EBITDA, 30 billion rand or about $2 billion of cash on our balance sheet, and obviously generating very good cash flow. So we're in a very strong position to continue to grow the business and add value. Last year, we concluded 4 acquisitions in the battery metal space, which is further diversifying our portfolio. And these metals will become a bigger part of our business in the next 3 to 5 years.
Fantastic. Yeah, before we talk about your diversification, because I really appreciate what you are doing there, I saw there is a strike going on in South Africa on your gold mines. So what's the takeout here?
So we've been negotiating with the unions. I mean, in South Africa, we have these regular periodic negotiations on wages. We obviously have quite a labor-intensive operations in South Africa. At our gold operations, we employ about 31,000 people. So we've been negotiating with the unions since last year, about 9-10 months now. We've made a number of increases to our offer, and we've made an offer now, our final offer, which we think is fair. It's about a 6% increase in the first year, about 5.7% in the second year, and about 5.2% in the third year, which is above the inflation rates in South Africa of about 5%. So we think it's fair. It takes into account the inflationary pressures that people or employees are having to deal with, but it also takes into account the sustainability of the business. The unions made a decision to call a strike, and we're currently in the third week of that strike, but we're confident that we'll be able to reach agreement and end that in the near term.
Yeah, it would make really sense, because as I understood from previous talkings with you and also others, that you are anyhow paying much more than the average wage, right?
It's in line with our industry peers, which are not that many more of in the South African gold sector. But certainly in terms of wages, mining employees entry level earn more than, say, a teacher or a nurse or even police and fire, those kind of jobs in South Africa. So it's a fairly well-paid job relative to the rest of industry.
Absolutely. Great. South Africa, that reminds me on something. Uranium prices are approaching $58, $59. And I remember you have like 60 to 80 million pounds of uranium reserves plus resources, I think in old tailings also. So what is the plan there? Because to my understanding, uranium prices are approaching maybe the area where you might think to restart something here.
Yeah, that's correct. And we announced last year that as part of our green metal strategy, which includes moving into battery metals, it includes growing our presence in the circular economy, recycling and dump reprocessing. We are looking to unlock that value in uranium. So we've got a dump of about, as you say, 60 million pounds of uranium sitting on surface at our gold operations, because uranium was historically mined as a byproduct of gold. And when they stopped processing the uranium in the 70s, 80s, the late 70s, it's just been put on surface. So it's easily accessible, and it's a matter now of looking at, how we're going to develop it. We'll have to build a processing circuit, but we're looking at the best way to create that value for our shareholders.
Okay, so this is in the making. Can we say that?
Yes.
Wow,
yeah, we've currently got a process underway. So.
Okay, super. What might be a time plan to think of within 1 year, 2 years? You can start there?
Yeah, listen, it'll take a bit of time. We first got to obviously look at the different options. So we're doing the different studies and looking at what the best approach will be. And then we'll have to obviously get approvals and get that process in place. So yeah, a couple of years is probably reasonable.
Okay, super. Would that be only then uranium, or is there also some gold associated in those dumps?
So there is gold associated. We originally had a plan some years ago to mine the uranium and the gold, but at the time the uranium price was in the low $20 per pound. Now, as you say, at $40-50 per pound, it's looking very attractive. And there is residual gold as well, which would add value as well.
Fantastic. Great. That sounds super. You said it already, energy metals. Let's come to that, because you have lithium projects. You were trying to buy a copper project, and you are also, you have the uranium one, but you have also bought the Aramet facility in Le Havre. So what are the plans there? Because I understood that you want to implement probably in several years a real battery recycling. And I could imagine, with all those millions of cars coming now onto the streets, that might be within, I don't know, 5 years, 6 years, a super business for you.
Yeah, and again, that fits in with our circular economy strategy as well. But we effectively bought, and it was closed in February this year, the Sandouville plant from Eramet. It's an existing nickel refinery, processing nickel, that produces nickel and cobalt products. And there's a piece of ground adjacent to that facility, which is already permitted for industrial use, which we are looking at potentially developing a nickel sulfate processing facility. So producing battery grade metal for, the growing European battery market and gigafactories in France and in Europe. And then also looking at the potential to build a recycling facility, a battery metal recycling facility as part of that new development. And that's quite exciting. I mean, again, as you say, the volumes of vehicles, but with accelerated projections of BEV sales in the market, it's only a matter of time before you reach the right kind of critical mass to make it viable to be reprocessing batteries. It needs a little bit more technology development, but we think it's a very exciting area.
So that means you are reinvesting your profits out of the mining now into the future of recycling.
Yeah, listen, I mean, it's complementary to our mining, because the mining products obviously go into the batteries, and we think that over time, I mean, I think we've seen in the global economies that reliance on global supply chain is changing. With the disruptions from COVID, with the Ukraine-Russia conflict, we think that there's going to be a shift towards more regional supply chains. So we want to be close to the end users. And we also think that with the increased focus on environmental issues, it's becoming harder and harder to permit new mines. So naturally, recycling and that secondary supply is going to become a bigger part of the overall supply of metals, critical metals in the market. And that's why we are looking at growing our recycling business and also potentially expanding our dump reprocessing business.
Okay. If we stick just a second longer with the battery metals, you wanted to take over also mines in Brazil, then you have rejected. So what is the status there? Because I think that they tried, or they have sued you already, right? The major
no, there's no formal legal proceedings yet, but they have indicated that they obviously are considering that. But essentially, we had agreed or announced an acquisition of two two operations in Brazil from Appian Capital, the Santa Rita nickel mine, and then the Serrote copper mine. Shortly after we announced that transaction, though, there was an event that took place in the open pits at the Santa Rita mine, which, after careful analysis by our technical team, we decided was material enough for us to terminate the transaction. So we gave notice to Appian in January, and that's the current status of that position. So we're not continuing with that acquisition.
Okay, but would you want to continue maybe in the future to buy nickel copper assets, because then you have the refinery? It makes sense.
Yeah, no, certainly our ambition is to grow our battery metals footprint. So lithium, nickel, copper are all very attractive metals. But, obviously, given the current price environment, particularly disrupted by the conflict in Ukraine, nickel's hit record prices. They had to suspend trading on the LME. So it's going to be more and more difficult to execute transactions in this environment. And we are very, very focused and disciplined about value when doing M&A. So, at the right time, we'll grow that business as well.
Super. So how is your platinum palladium business going, especially in the US, and your catalyst recycling?
So going very well. I mean, the US, we've had some issues in terms of the operational buildup at Blitz, but, still prices are very good, generating plus 50% margins. And the recycling business is, very, very profitable and quite low risk. Obviously, with the disruptions to supply chains, it has become a bit harder to get supply of auto catalysts. Towards the end of the year, we did have a bit of a constraint due to logistical issues, but now it does seem to be easing a bit. But both the US operations and particularly our South African operations are extremely profitable with the PGM prices, at very, very high levels again.
Okay, super. So that looks all in all very good. Let's say, what are the most important things for this year you want to reach, or even immediately? I could imagine to settle the strike is maybe one of the big topics for you.
Yeah, certainly. I mean, we would like to settle that as soon as possible. I mean, it's impacting, on the business. Although gold is a smaller part of our business now, it's only 6% of our EBITDA. So it's not as critical as it was some years ago. But it impacts negatively on our employees who are not being paid while they're on strike. And that's very difficult for us. And also impacts on other stakeholders who rely on those operations. So that's a significant focus. And then it's about also preparing ourselves, delivering on our strategy to become position ourselves in the future green economy and environmentally focused green metal strategy, delivery on that strategy, and then obviously to continue returning value or sharing value with stakeholders, and particularly shareholders, through dividends. We also did a buyback last year, $575 million. And again, if we've got surplus capital, at the appropriate time, the board will consider returning that surplus capital to shareholders again.
And also via buyback, and of course you want to do another dividend this year, right?
No, the dividend is fixed. I mean, that's just part of our investment case, is to be a leading industry dividend payer. So this is over and above. So we would look at buybacks or special dividends, whatever's appropriate at the time.
Super, perfect. So thank you very much, James. It was a great update, and look forward when you really start uranium processing, to be honest, because I have quite a good feeling with approximately 200 nuclear power plants built within the next 15 years. That might be a great business for you.
Agreed. Thank
Super.
you.
Perfect. Thank you very much, James. All the best. Yeah, ladies and gentlemen, that was James Wellsted from Sibanye-Stillwater. You heard it. The company is in perfect shape. $2 billion cash in the bank. I love that. They just paid a beautiful dividend, and they will pay again this year dividends. This is something what we really appreciate as shareholders. But as I always said, the uranium reserve, they have over 60 million pounds, and this is in tailings, meaning that's on the surface. This is, to me, easily a $1 to $2 billion plus profit chance, because you can imagine the production costs would not be in the high 40s as it is today in the world. I assume that more closer to $25 per pound. And even if you make $30 per pound in the production cost with a uranium price of $60 like today, this is a real beautiful cash cow, and that comes all in addition. Don't forget that. So I would suggest you really have a very close look to Sibanye-Stillwater. If you are not already a shareholder like me, I will add to my position. That is also for sure, because I think the team is doing a phenomenal job here. Thanks for watching us, and bye-bye from Switzerland.